Hi there, Pragati here. Today I want to share with you why I think paying off your mortgage too early is not a great idea. I'll give you 3 simple examples which you will understand why paying off the mortgage so early, or too early let's say, is not a great idea at all. Reason number 1. Mortgage is one of the cheapest loan that you can find in the market. Okay, so mortgage rates are, most of you are probably on under 2%. Okay, inflation rates are also under 2%. We're talking about the UK market here. So it's a very, very cheap loan. If you go and get a personal loan, business loans, and other different kinds of loans, the interest rates are probably 4, 5, 6, 7, 8%. It all varies, but an interest rate of under 2% is so cheap. So a loan that you actually getting at such a cheap rate, I think you want to keep it as long as possible. If you think about the banks and a lot of financial institutions, that's what they do. Borrow money at a cheaper rate and then they lend it to someone else at a higher rate, and they make the difference, and that's how they become rich. And this is pretty much what's happening here. So if you're clearing off your mortgage so early, you're actually just not seeing the opportunities right in front of you. Let's say you were planning to put £20,000 towards the mortgage. Okay, so you've got £20,000 sitting in your account and you're thinking, okay, so I'm going to try and have my house mortgage free. I'm going to put this towards the mortgage. Okay, so your interest rate was probably 2%. Okay, so on a £20,000, the interest rate you would have been charged would be at 2%, that's £400. Okay, now think about that £20,000. There are so many other investment vehicles such as the stock market, renewable sources of energy, you've got peer-to-peer lending. So there are lots of other sources where you can actually easily generate more than 5%, 6, 7, 8, even 10% of interest on the money that you put into. Okay, so let's be really conservative and say you was getting 6% return on your investment. You put that £20,000 into stock market and you got 6% return, for example. So the 6% of 20,000 is £1,200. Okay, so you would get £1,200 from that alternative investment instead of paying off the mortgage where you would have been only charged £400. So if you look at the differences there, so that's an £800 difference in a year. That's massive. Okay, very strong number 1 there. Number 2 is your diversification. Think about you got this big house which is mortgage free. Okay, nothing else, because you put all your money in there and you got only the house there. So if something happens or anything happens, that's the only thing you've got. You haven't got any other things to rely on. Instead of putting that money into the mortgage there, you could have been buying a buy-to-let property, for example. Okay, so if you had bought a studio flat or 1-bedroom flat outside London for £20,000 as a deposit, now you've got another asset which is also building wealth, which is also increasing in value over time. So you got that. So this is what the diversification is, and you're using your wealth and your money to acquire different assets around you, not just only one. Okay, so you don't want to be dependent on only one thing. It's just like putting all eggs in your same one basket. Okay, so that's number 2. And number 3, even though if you was really keen and if this was a matter of pride for you that you've actually got mortgage free in your property, it's never going to be free. For example, think about the council taxes you pay. Even if you've cleared your mortgage, you still have to pay your council tax. Okay, it's an ongoing thing. If you're living in a flat, you still have to pay your service charges and you still have to pay your ground rent. I think that clearing your mortgage is a big certificate, and I think you should get rid of that. And finally, I've actually got a bonus point as well why paying off the mortgage too early is not a great idea. The money that we got now is less valuable in future. For example, the £100 that we have now is less valuable, is less than £100 in 10 years time. Okay, so it could be only £80, it could be worth only £80 because of the inflation. So instead of paying £100 now, if you pay the same £100 to the bank 10 years later, you're actually paying them only £80. You're actually paying them less. hope you understood my points there, and you're more than welcome to have your own thoughts on this. And please feel free to make a comment there. And thank you for watching. Please like and subscribe my channel.